Good day, everyone. Welcome back to Fighters Trading Channel, and we are back again for another weekly flows video. It is Sunday, the 13th of April, 2025, and we are going to be taking a look at the market, see what happened in the previous week, and how we can capitalize on the new movements moving forward. As I've mentioned in videos leading up to this, we are currently in the wild west of financial markets at the moment. Trump implementing tariffs, then pausing tariffs, causing the market to move in a very frenzied motion. We now have confirmation that Trump is no longer taxing technology in terms of phones and laptops coming out of China, which I'm sure is going to see some positive gains in the market. But let's take a look at the price action structure first and see what we can gauge from that. So, starting with Nas100, we are on the monthly time frame. What we can observe is that price is currently trading above the 50 SMA. We are reaching that sweet spot between 45 and 55 on the monthly time frame, which may be an indication that we are looking at that bounce happening very, very soon. When price actually did hit these zones in the past, we can see that there was a significant bounce from there, even at this level here on the 2nd of October 2023. And we have not hit these levels since that time. So, new territory, but we are in that sweet spot, so we could see the markets pushing higher. In terms of price action structure, what we can observe is that the price is definitely bullish in nature from a longer term time frame. We can see that despite price falling significantly after the tariff announcement, the markets rebounded with vengeance and the bulls definitely took control. And with that, we created a very bullish looking pin bar pattern. Despite it being bullish, this candle is still very much in the bearish nature of closing. And what we can observe is this massive wick rejections that we had, not just in this particular candle for April, but ones from September, August 24, even July 24. Wick rejections all at these levels. Of course, the wick rejection for April falling further down closer to the 50 SMA all give rise to the idea that the bulls are taking control at this level. So that's what we see from a monthly time frame. Let's go into a weekly and see what we can observe. So, as expected, weekly time frame. So, Thursday, Friday, sorry for saying so much, I'm practicing. Thursday, Friday, not for this week that's passed, but for the previous week, I believe that the date there was, sorry about this, the 3rd and 4th? Yes, the 3rd and 4th of April. We had the Trump tariff announcement on that Wednesday evening, and then the markets just dropped, significant drop. But we can observe that coming into this week, as soon as he announced the pause, we saw a massive spike up in this market. I mean, every investor just got back in. So it's clear that the market definitely found a bottom at this level around 17,000. So definitely found its bottom over there and then pushed higher. Although on the weekly time frame, looking at the indicators, we do observe that price is now trading below the 50 SMA, and we are in the bearish region of the RSI below 45. So the indicators on the weekly time frame do indicate bearish pressure still present within the market. Now, that being said, we can also observe bullish structure has been broken at these levels here at around 20,700, which was a while back. It was around the 3rd of March. That structure was broken and markets have fallen. Despite finding support here, we still see bearish structure predominantly in the short-term to medium-term trading, price action trading. So we have yet to see, we would have to see more significant bullish action happen next week to actually confirm that the bulls have taken control. But let's go into the daily and see what we can see. So on the daily time frame, I think it paints a little bit more of a clearer picture. So the bearish structure that we had coming in from March, definitely strong bearish structure. We continued all the way up until the tariff announcement, and then the markets found support around that 17,000 level. Markets did fall all the way down to about 16,350, but sharply rebounded. We did have some wick rejections to the upside, and we were very much in a consolidation around the 17,300 level for about 2 days. Then after that happened, Trump announcing the pause on the tariffs, the markets just skyrocketed. And where did it skyrocket to, though? It hit the break and retest level of the previous lower low that was created within the bearish structure and then sharply dropped. So it is clear that this level is holding for the time being, and it is also clear that the bearish resistance trend line is holding strong. Now we do see the major support coming out of the daily level, so it makes sense that it bounced off this particular level at around 17,300. Will we have further bullish movements? I'm not sure. I think we'll have to wait to see how the markets open, how market conditions are, how investors are positioned towards the markets. And looking at the COT report, there are long traders stepping into the indices, but there's still significant short positions there. Now, that being said, let's go into the 4-hour, and on this time frame, we can see a little bit more bullish structure now. So I would call this a sort of retracement, but of course, this bullish Marubozu candle, massive bullish Marubozu candle, has engulfed approximately 5 days of movement, and not to mention that massive drop that happened after the tariff announcement. So it's absorbed all of those movements, and we could potentially call this a retracement, but I would love to see how price action reacts to this break and retest level again. If this level hold and the market drops, I will continue to look for shorts towards the support at 17,300. If it breaks above the 19,200 range, I would then look for buys. I would wait for the retest of the level after it breaks out and then trade it all the way up. Why? Because then we would have a broken resistance trend line and then a bullish break and retest level at the zone of 19,200. So that is my trading strategy for Nas100. Let's take a look at US30. US30 on a monthly time frame. So very similar to Nas100, we have bullish indicators on the 50 SMA acknowledging the medium-term to short-term bearish nature within the monthly time zone. So what we can see is that price is within that 45-55 sweet spot. Price was there last in about October 23, just like Nas100. We are back to those types of levels, and when price hits those levels, they generally pop. So I'm looking for the pop. So what we can observe, price has bullish confluences on the indicators. Price action also indicates bullish confluence. We have massive wick rejection to the downside created by the massive drop, and then investors stepping back into the markets after the pausing on tariffs. On the weekly time frame, we can see this a lot more clearly. So where Trump had the tariff announcement, the week he had the tariff announcement versus this previous week when he put a pause on it. So strong market manipulation, but that being said, we have a bullish support trend line that is currently at play. And this bullish support trend line makes sense. It makes sense why this announcement was made, when it was, and why the price action reacted so violently and so sharply to the level, because this is a tried and tested level. Not to mention the support coming out of these zones 1, 2, 3 here at about 38,500. I'm sure on the daily time frame those are marked out, and so let's take a look at that. On the daily time frame, we can observe, oh wait, sorry, just going back to the weekly, I want to see, so price is trading below the 50 SMA, and we are in the bearish territory of the RSI. So we have some bullish confluences, some bearish confluences. I would say this trend line here is a massive bullish confluence, whereas the indicators give us cause for concern on the bearish side. Coming into the daily, we can see price is definitely trading below the 50 SMA, and we are very much in that bearish territory of the RSI. We are in the sweet spot now where we could see a further drop, but looking at this massive candle that happened on Wednesday, the 9th of April, the bullish Maribozu, and the way it engulfed the losses which were taken from that previous week, the 3rd and 4th of that previous week, we are definitely stepping into unknown territory. We don't know if investors are going to maintain this. COT reports does indicate investors stepping into the indices, a lot more longs than there are short positions taken, but there's still a significant amount of shorts versus longs. So we'll have to wait and see what happens here. But for the most part, with the two bearish indicators, we have bearish resistance trend line at play, and we have the structure of the bearish trend very, very much intact, with the lower high at 42,650. A break, the price coming back and hitting the break and retest level at 40,800 makes sense, and I would want to see how price action reacts to that level. And depending on its reaction, whether it breaks above or continues below, will then determine the type of trade I'm going to be taking. So we will have to wait for the opening of this market to determine what we will be doing for the week ahead. Let's head into gold now. Gold continuing to make its bullish highs. And we know that in times of uncertainty, investors gravitate to gold, and that they have. So what we can observe here, price continuing to make highs, bullish structure very, very much intact, price very, very far removed from the 50 SMA, and we are hitting those 85 levels on the RSI. What does this mean? We've far extended from 50 SMA and we are hitting 85 on the RSI. We are in overextended bullish territory. We are overbought. The market is overbought, and we are due for a significant drop. When that drop is going to happen, I cannot tell you. Why? Because right now the markets are being moved by fundamentals. It's being moved by the fear of the economics currently stepping into the market, and the global markets is trying to figure out how to adopt and implement the economic tariffs coming out of the US into their own systems and economies. And until they figure that out, gold is going to continue to make highs. But when that settles, I can definitely see gold having a significant drop to the downside as countries sell off reserves to actually fund the changes in economic structure that we are about to see. But for now, we continue to ride the highs. So going into the weekly, we're very much seeing the same thing. Bullish structure, price far removed from the 50 SMA and being in overextended territory on the RSI. So even on the weekly time frame, it agrees. This market is way too aggressive and has moved way too quickly, and it is due for a correction. But right now, investors are scared. They are risk off on the market, and for that reason, they are continuing to buy gold. And you should too, for the most part. So on the daily time frame, what we can see is price is a little bit more closer to the 50 SMA. We can see that there's a lot more retracements here, internal retracements within that massive bullish trend that we have. And when we have those retracements, the market absolutely pops. So when we see retracements, when we hit our sweet spots within the RSI, as we can observe here, price from the 3rd and 4th of April, very bearish, fell all the way to the bullish support trend line, very close to the 50 SMA. We had curvature of RSI within the sweet spot. That is the best signal we can possibly see, indicating to us that, hey, the retracement's taken place, it is ending now, time to get in. And that is exactly what happened. At this point, market was undecided and the bulls took full control from a position of power and continued pushing this market higher. And it is going to continue to make highs. I mean, we can observe here, we are currently on an impulse move. We are in all-time highs. The market doesn't have any structure to play with, but once it creates another retracement towards this bullish support trend line, towards the 50 SMA and within the sweet spot of the RSI, we have a prime opportunity to capitalize, place an entry, and ride that trade all the way to the upside. Of course, like I mentioned, this market is overextended in the higher time frames. If the market continues to drop further, that's okay. It just means we take a losing trade, we adapt our strategy, we use the new price action, and we trade accordingly. But for now, this is the price action being presented to us. This is how we want to trade it, and we want to continue to ride that bullish wave. I'm not going to really go into the 4 hour. The 4 hours is going to confuse us, but what we can see is that we are currently on the impulse move. We need to await the retracement that is going to take place that brings the market down to a level that is acceptable to us, to a discount zone, where we can then buy and ride the wave to the upside. Taking a look at Euro USD, this had some significant moves. So we can see bulls on the monthly time frame. Price has finally broken above the 50 SMA as of this month, and we are in the bullish territory of the RSI, not to mention the massive bullish candles that we are currently playing with on the monthly time frame. Going into the weekly, we can see we are now out of that consolidative phase. We can see here markets trading upon the 50 SMA was very much in consolidation on the weekly time frame, and we have now fully broken out and extended beyond the resistance that has plagued this market since about February 23. So with the break of that level, if this move is sustained, if markets come back, retest this point and keep pushing higher, it will then be a sustained bullish trend that we can ride all the way to the upside. Right now, though, we can observe that price is hitting that overextended territory above 70 on the RSI. So we are due for some sort of correction soon. We can see on the daily time frame, we're having wick rejections to the upside after massive bullish movements. So I will continue to be looking for longs in this market. I don't think we're going to get shorts anytime soon. If the market does short, I am seeing all this liquidity that we are going to collect, and then we are going to continue to push higher. Per the indicators, we can see price is far removed from the 50 SMA at the moment, and we are in the overextended territory of RSI. So even on the daily, it does agree we are in need of a deep retracement, or not so much a deep retracement, but a moderate retracement, as to get long positions on discounted zones. So looking forward to seeing how that market shapes up this coming week. Taking a look at Euro USD, Euro JPY, there is not much to report here. The market is bullish on the higher time frame. We are consolidating on the weekly, and on the daily, we are in that consolidation phase. So not a lot of momentum stepping into this market. Indicators are very much consolidative, so it is not a market I'm looking to trade at the moment. I think for the most part, this is the one market that isn't having major violent fluctuations due to the turmoil coming out of the US. So staying out of this, because when there's not a lot of turmoil in a market, it means there's low momentum and not many opportunities to capitalize on. USD JPY though, definitely getting some movements there. So let's take a look at the monthly time frame. Monthly time frame, we can see we are a bit choppy at the top, trading close to the 50 SMA, and we are in that sweet spot of the RSI to continue the bullish trend. So we may be seeing the bull stepping in sometime soon per the higher time frame. But as for the weekly, we can see we are in a bit of choppy territory, as I mentioned, from the monthly time frame. The 50 SMA is being invalidated at many points. Price is breaking above, breaking back below. RSI is within the bearish territory as expected because price is below the 50 SMA, but no clear trend per the weekly time frame. However, if we go to the daily, we can clearly see that the bears are in control within a short-term to medium-term space. And that being said, price is trading below the 50 SMA, and we are hitting some sweet spot trades here on the RSI. Placing our indicators there, we can go into the 4-hour time frame and actually observe how our entries would take place. I mean, these are great moments to actually just knock a trade there, knock a trade here, and ride that short wave down. I do think we're going to keep seeing further bearish movement in this market, although we are approaching support at around 140,200. So once price gets close to that 140 level, I would start being concerned with the bulls stepping back into USD JPY market. So that is the analysis for the week ahead. I'm not going to go into the other pairs. I just really wanted to thoroughly discuss the indices, gold, and our major currency pairs. I will just take a quick look at DXY and the VIX index. And the reason for this is we can observe from a daily time frame that the dollar index is bearish at the moment. Per weekly time frame, we are hitting that support level at 100, and where price has broken below that 100 point right now, but we may be expecting a bullish push in the dollar. So just be cognizant per the weekly time frame. We are hitting that overextended territory, oversold. Yeah, oversold territory on the RSI at the moment. So it makes sense that there will be some type of push up. The significance of that push up, I'm not too sure. But on the DXY, we can observe bearish structure, which we can then use as confluence points to figure out if this market is going to continue to move up or continue to move bearish. Per the VIX index, so the VIX is very high at the moment. We actually hit peak levels of 60. When was this? Friday or Monday. We hit peak levels at 60. I mean, that is unheard of. And that was all due to the tariff announcement. Right now, we are 37, and we're still very much on that risk-off territory. And we are seeing that by the rush, the gold rush that we currently have in those gold markets versus the indecision and the volatility that we have in the indices. So it makes sense that we spike so high and now we are a little bit lower, but we are still in that risk-off territory. And until we come out of that, I think we need to just be a little bit more patient with our indices and continue to milk gold. Let's right quick take a look at what's happening on the fundamental side for the week ahead. Fundamentals for the week ahead, we can observe some red folder CAD news on Tuesday as well as some pound red folder news. We have USD retail and core retail sales on Wednesday at 2:30 p.m. as well as major CAD moves right after that. And then we also have Powell speaking 7:30. Oh, that's going to be an interesting one on Wednesday. Make sure you tune in for that. With the way speeches have been going in the US, something big is probably going to come out of it. If not from the presidency side, just from how the Fed is going to respond to these things that Trump wants to do. Then on Thursday, we have some Euro news and USD news, and Friday, no news at all. So pure technical trading day on Friday. So I hope that you found some value in this information and in this weekly flows analysis video. If you enjoyed it, please like and subscribe. Leave some comments down below of what you would like to see within the analysis. And with that, I hope everybody has a successful trading week, and I will catch you in the next video. Cheers.